G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Please be sure to check out my links below, including exchanges I use and social media content that I post. All right, let's go. So the topic for this video, we're going over some economic data that is upcoming. It's very, very crucial. And looking at the greed and fear, or fear and greed. I like to say greed and fear. I don't know why, but yeah, fear and greed. Crypto and Bitcoin search trends, as we always do. And go to the charts, look at where we're tracking now. And yeah, seeing what the short-term moves are and where we expect things to be heading. So first up, economic data we have here. So we've already had ADP, ADP employment changes, I should say, for Wednesday night, and it came in better than expected, so it's holding up quite well. Okay, and the job openings were better than expected, and they were, yeah, I'll show you actually, so you can see where we're at, and you can see here 8.04 million compared to 7.7, so it did go up, which is quite good to see more job openings. So not quite as bad as, consensus was predicting worse, but it got better. And yeah, that was that. And if I go to 2-star impact, it'll show the ADP numbers. So employment changes was 143 and 103,000 previous month, and they were predicting 120 or 90, either one of those. And it was a lot higher, so it did come in a bit better. And as you can see here, we have some events coming up, which is very crucial, and especially for the predicament of the labour market going forward, and seeing how the economy's holding up. Is the labour market is the most crucial thing at the moment. The Fed's looking at, and we see that non-farm 142,000 previously, okay, and they're predicting 130,000. And then you have an unemployment rate at 4.2, which went down slightly, okay, and they're predicting either flat or rising, okay. So yeah, pretty standard stuff, but very, very crucial to see if we do see an uptick in the unemployment rate. If we see an uptick, then the Fed will probably cut by 50 basis points the next meeting, and it won't be quite pretty for the stock market, I don't think. Okay, so we don't want to see high unemployment rate, want to see it either flat or lower, and I think the markets will probably like that. We'll see. But yeah, the rate cuts are really crucial. See, they cut aggressively or cut softly, but it all depends on how bad the labour market gets, because they're going to panic cut. That's what it's about. It's not about pleasing the individual that's wanting rate cuts to help them with their mortgage, because that doesn't kick in until months and months later. It's about doing what's right for the economy, and the Fed is looking good with the inflation numbers, heading in the right direction towards 2%, but unemployment rate and non-farms, the job market in general is not quite pretty. So yeah, that was that data we have to sort of keep track of. Okay, so yeah, that is that. And I think there's another statistic here was ISM manufacturing employment. So using the ISM manufacturing data, it was 46 previously and 47 consensus, 47 forecast. We came in at 44, so it came worse than expected for the employment change there for the ISM manufacturing. So you've got a worse number here. We've got a beat on openings, and ISM came in as expected. But like I showed you, ADP was better than expected. So it's mixed data. You don't understand what's really the clarity there for the job market's heading and the strength of it. But this will really tell us. This unemployment rate will be the one that leads the narrative for that one. All right, so that's that data. And an ad. Right, to start us off on this analysis, the fear and greed index is at 37 now. All right, and we drop back down in the fear territory. We're down here again. So I thought we're out of this trough. So, we're down this trough for a bit. Let's go for about a month or so. Even 3 months change. Might be a bit more clearer to see. So, from August, we had this fearful events, the yen carry trade thing that went on. 17, and we sort of trended up, a couple of days later, 20, and then it went to 25, 30s, and sort of got out of that trough, went up, but couldn't break the highs here, couldn't go higher, then like 74, so got to the mid-50s, then we crashed back down, and then 20s, and then, early 20s there, September, another sell-off, and it rose up. As you can see here, it's rising, 50s, 50s, 60s, 64, so it looked like we're getting really greedy, and then, bam, big pullback. So back to the 30s again. So, it's very interesting. Fear and greed is going low, and it's heading pretty sharply down, as we're seeing a bit of a sell-off in the crypto market. And I will show you that in the charts coming up. But, getting interesting now. It's towards the end of the year. Will there be profit taking, or will there be accumulation? And you see a big green Q4. I don't know. I don't see. I see a bearish Q4 coming for the markets and crypto to reset for next year. And I do think it's going to be a bullish year next year, but it's not this year though. I think we're going off a big rise we've had already, and we'll get a big sell-off, I think. So that is what's going on in the fear and greed. We have Google Trends. Now, Bitcoin search trends worldwide, 5 years, okay? And you can see it's pretty low at the moment. No one's really interested. So it's down at 18. So very, very low. And last time we were 18 was, we weren't even 18 here. So it was 19. It got the low there in May to June. And then June to, late June there. If you go back even further, still at 19. So 18 level has not been reached, right, since October of 2023. So back to a year ago, okay? So it's going back, resetting again, as there's no one really involved in the markets in terms of retail participants. It's just, the big whales playing games and just, trading the markets up and down, but there hasn't really been much movement. It's sort of slightly slanted for Bitcoin going downward. And you can see this is resetting back to lows. And we got these lows again in July, August 2023 and May 2023. And roughly here in February, March 2023. And the bear market lows pretty much around there in the late 2022. So heading back to that sort of territory. It's not looking quite pretty. And 2004 to present. So pretty much the historical, going back to the inception of Bitcoin. And you can see that it's rising over time. So the lows are getting higher. See that these lows are gradually going up over time, which is good to see. But the problem I do see is the high. So 100 at 2017, December. And then we've got 64 and a little bit higher at 66, May 2021. And then that was it, And then 40 recently in March. So it really isn't getting much higher than that big peak in 2017. It's not, it's not getting really much enthusiastic, but we'll see if it's really this bull run coming up. We see this euphoria come in and try and get to 100 again, or at least get to above 60s that we did here in 2021. So, I want to see it trending upward. More interest in Bitcoin, not less. But the lows are getting higher and the highs are getting lower. So it's like contracting. It's quite strange to see what's playing out, but nevertheless, that's the search trends, and it is very, very low at the moment. There's not much participants in the market. So that is that. And we're in the markets now. So Bitcoin, and we're on the 3-day time frame, and you see that we are sort of hovering around the 60,500, or we have 61K just above it. This line I've drawn out ages ago, and you see we're sort of respecting at the moment, as you can see there. And, we respected it here, we respected it there. Sort of deviated slightly below it, but nevertheless got around it. And then we rejected and came back down to it now, okay? So I want to see if we want to hold here, or will we just reject and then continue lower and head down to 51K, which is where I think we're going down to. I think the bear's going to win this time, and I'm not getting above this trend line. This downward sloping trend line is getting rejected once again. From previously, we've just been hammering it and going lower. And the same as, the downside, you can say, these touches here, all right, and slightly a wick below it, but, body closed above it. And again here, and it's been contracting and just chopping up and down inside this downward sloping channel, okay, which is not good to see. Not everyone wants to see this sort of stuff, but it is what it is. It's not fun. It's boring. It's just accumulating, or just could be just a distribution phase. We don't know. Hopefully, it's not too bad, but yeah, I do see potentially 41K by the end of it. All right. I'll show you the MA ribbons, and this is on the 200 daily. Okay. So I want to show you something interesting. So we have lost this 200 day moving average. Okay. As you can see, when above it, we try to stay and then just didn't even want to try it, straight through it. And to this support line, and then down we go. Okay. Now if you look at the bull market support band, is there, and it's a bit lagged behind this price action. But you see that it is right sort of below it, right below the SMA and the EMA. It's right below the EMA, okay? A 21 week SMA. So we are below the bull market support bands slightly. And yeah, so I thought we were going to bounce off it and at least go a little bit higher to about 67 and then reject, but we didn't get there. We got to 66.5 and then got, just poof, big down move in this candle. All right. It's on the 3-day time frame, so it's a bit different daily, but yeah, you get the idea. It's just more consolidated, more smoother, and that is what we see in the bull market support band. I want to show you something else. If I go to the 100 weekly moving average, this is something interesting to see. Okay, so this one here is right down here. All right, 100 week moving average, and you can see we're on the 3-day time frame. Let's go to the weekly and have a look. And yeah, this is rising, of course, over time as time goes along, and price just keeps chopping inside this channel, and this will keep rising up to meet price. And eventually, you see price touching it in the sometime in the near future. And yeah, we're at 40,500 right now, but obviously we're a long ways from that. We're at 60,500, so we're a good 20K down. Okay, but this keeps rising over time. Price will come down to meet it. Okay, and why do I say it should meet it? Well, let's have a look. Let's do an analysis here. So we have the Fed rate cuts. Okay, interest rates. And the last time this occurred, this big cut here, or a cut of sorts, it did occur, was back in the previous cycle. Okay, and Bitcoin had a nice rally going in. These rate rises, and then it flattened. As you can see there, it flattened, and then Bitcoin rose. Probably showing logarithmic chart if easier. And Bitcoin rose into flat rates, and then it topped right around here before the cut, and the cut occurred right here. Okay, and then you can see it rallied one more week, and then the second week, boom, it rejected. Then we started going down, and we came back to you guessed it, the 100-week moving average. All right, we bounced off it, went higher, and then we just failed to make a higher high in this one. As you can see, this high was lower than this one. All right, so that's lower, and then it went down, made a lower low. All right, it came back down to the 100-week moving average, and we did go below it slightly, but we did bounce, started to sort of consolidate through it, and then above it, and rose again, but we couldn't break this high. This was a fail. This is a failed attempt. But we also know why this failed, because we had the big pandemic drop, all right? And the big cuts came, and then bam, we're down to near zero band of rates, which really was the low point. Came back to, this period here in 2015, and then, should say, 2014-ish, 2015, so going all back to the GFC just after it. All right, so the rates were really similar levels. But, that was emergency because of the pandemic, of course, induced recession that we had. But, you can see that, this was a similar pattern, right? But draw a parallel channel and, you put yourselves in there like that. And you can see that this is a downward channel, okay, as you can see there. And we had a rate cut right after the channel, and then right here, a top 1 week, and then the second week was rejection, and that was it, all right? You go to here, let's have the cut All right, already topped before it. This big, see how big the cut is. It's huge, 50 basis points. And right candle here. Sorry, this candle here. We had one candle up and then one rejection, one down. Let's go back. Let's go. Okay, so one candle up and then one down. So similar sort of candle pattern there. Always see it go lower and then trend down to the 100-week moving average is where this one met for 2019. Okay, as you can see there, and I did respect it. And if it does, and we do break down below this channel, this will be quite bearish. Okay, for the short term, might shake a lot of people out. That's at around the 40,500. But if it does, it rises over time. Of course, I don't know where it's going to go, but we'll see. Terrible drawing, but this price, makes its way. Depending on the time frame, this will keep rising. As I said, we could either go to here, the midway, or down to 41, or not even get there. Go back again. Sorry about that. Not even get there, and 51K could be the bottom. All right, and this could take its time and continue to rise, and Bitcoin just really stagnates. All right, and doesn't really go lower, and then it bottoms out, and then go into the mania phase, going up into 2025, end of that year. Who knows? It could be either 50K or 40K. It really doesn't matter. For me, my strategy is that I need to see risk. Okay, Bitcoin risk, this metric here, needs to be at 30 or below. So you see here, 53,896. So 51K will get us in truly below 30 risk, which will trigger my strategy. Okay, and you need MACD as well. Mine's on the 3-day time frame. Okay, so I need a cross on the MACD. So this does cross bearish now, and we do see this go below that one like this. Then you want to come back down, okay, and then you want this to come above it and be bullish, okay, and then that cross there will be where I enter after the 30 risk has been achieved. And then we see a cross on the MACD, like this one here. See, this is a bullish cross right there. Price did top though, but that was the top of the channel. And we had a cross here. That was actually more bullish, that one. And had a bit of weirdness going on here. But you had a true cross here, and it was the top of this bit, and it did reject. So mixed results. The cross here, it did go higher. Okay. But for my strategy, I need this to cross. All right. And this needs to play out. The pink going above the blue. And and that will be 30 risk. And that's when I'll start to look at altcoins. Preferably, I want to see QE though. I want to see the Fed pivot to QE. Is what I want to see. To really, the Fed is responding to the panic in the labour market, and the banking sector or whatever it is, whatever it could be. Okay, that is what I need to see. Is QE as well, which is basically, actually I'll just show you. It is the balance sheet of the Federal Reserve. So this purple line here, as you can see, it's going down, right? It's been going down since April 2022. It's been trending down, and it looks like this doesn't want to stop. But when this eventually, curls back, right? This uptick right here, and this happens. I don't know when it's going to happen. It could happen next year, right? In 2025. But I'm just saying, when this happens, I'll line up properly. When this happens, this with the, you got to wait a bit longer this will coincide with Bitcoin dominance topping and ETH Bitcoin bottoming, and we should see alts probably bleed a bit lower for a bit longer, and then pull the trigger. But like I said, I have a strategy. I need to see 30 risk, okay, and below, and MACD cross on the 3-day, and I'll start accumulating. So that's my trigger to get in. And QE is a bonus, all right? It's a big bonus. It's very, very favorable for altcoins, especially. And they do outperform Bitcoin, all right? So I'll show you that right now. So Bitcoin dominance, as I've been talking about, all right? I'll get rid of the rate cuts. because they're sort of in the Bitcoin risk. And you can see this purple line is the Federal Reserve balance sheet, of course. And this red line I've marked is QE. So when they went from the restrictive policy, reducing their holdings, to increasing it, Bitcoin dominance topped. See that? Topped right there when they pivoted. And then bam, it just dropped. And this is this channel going down, 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 down. Did see it go up a bit. We did trick a lot of people, okay, in sort of late 2020 and 2021. And then it just fell off of a cliff. Just absolutely, wow, declined heavily. And the balance sheet was continuing up, of course. So that was favorable for altcoins. They were outperforming Bitcoin in this move. And that was the alt season that we all know and love, okay? So this big decline in Bitcoin dominance is what you want to see, right? And yeah, that was QT. So Bitcoin's outperforming here. Okay, so it's Bitcoin season. You see the bottom there is QT. See, and it started to go down, and then boom, dominance goes up. So it's the inverse, and now sort of consolidated, bottomed, and yeah, it went up. So the bottom was around here. See that bottom here, and that was when it started to curl down, and that was it. Boom, dominance just takes off, and nothing's changing. It's just continuing up and up and up and up, and looks really, really strong until this line, this purple line, until it curls back up. Okay, that will be the top for dominance. All right, that'll be it. That'll be Bitcoin has had its 3-year outperformance or so, how long it's been, and then the alts will have to step in. All right. So yeah, that is that. And you had an alt season here, of course, 2017 cycle. Terrible. But you can see the balance sheet wasn't going up, it was flat. See, it's sort of flat. It was, slightly down, but it was nevertheless, it was predictable and flat. And that's what we had an alt season. Okay, so it wasn't interrupted by the Fed. And the Fed started going to QT, and then that was it. Boom. Bitcoin outperformed. So alts outperform in this QE environment. See this, it rises, okay, and goes flat. Alts are good. This dominance goes up. As you can see, the green, it's bad for alts against Bitcoin. QE, fantastic for altcoins. And now we're seeing QT, okay? So this balance sheet is going down, right? As you can see, right? And with this going down, you stick to Bitcoin or nothing, or cash, right? And it's going up and up and up. Keeps rising and rising and rising. So there's no weakness at all in this chart. It just keeps growing. I've drawn this channel just to show you where we are. And yeah, it looks very, very strong, Bitcoin dominance. So don't discount it until I said this balance sheet starts to curl up. And then that's when you can say it's over. You can't definitively say it's over yet. It's not over yet. So the Fed is the ultimate key to this market. Because and we're seeing something happen in the dollar, the dollar dominance, and it's going up. So that big candle, massive candle. So a lot of people thought that was it. It's fallen down. We're going to get alt season. Usually when this breaks and goes lower, we get alt seasons, okay? So the balance sheet here, and I'll just mark out, this is a QE period right here. Whoops, that was bad. You can see just here, bam, that was QE. And then not long after that, the dollar topped, and then bam, we had a big alt season, all right? So that's alt season. Broke this trend line. See this trend line? Got broken, went down. Alt season here. See this? And the balance sheet was flat. Bam. Sold off. That was alt season in 2017. So yeah, you want to see that for altcoins, but at the moment, we're seeing it shoot up. So not good for the whole entire crypto market. And it shows it's not over, and the dollar has room to move higher, and don't know how high it's going to get, but this is not alt season, guys. Not at all. Until this definitively breaks, then we see a nice break, okay? I want to see it below this level here, which is around 99.7, all right, somewhere around there, 100 or so, and needs to break durably, but it hasn't done that, all right? So, yeah, no alt season just yet. Another thing to say about the crypto market is quite concerning is this USDT dominance, okay? And I'll take off the balance sheet now. I've seen enough of the Fed. I love the Fed. As you can note, every time we touch, this is the top of Bitcoin. Bitcoin topped here. Bitcoin topped here. Bitcoin topped here. Bitcoin topped in February 2021. Bitcoin topped in November 2021. That was the end of the cycle there. Every time it touches this trend line, see that? It was the Bitcoin top. And then I was bearish from there on when this goes up. All right. This is bearish for the markets as this is rising. And we've touched this trend line again in March of 2024. Okay, as you can see, it's been pretty accurate. And it's not doing anything differently to previously. It's doing the exact same thing. And it was declining. And then all of a sudden, boom, didn't even get to this trend line. And then now we're heading higher. So this is, you need to see this trend line break. Okay, and that would be pretty well, you know, you can say old season or whatever season. It's crypto season. But you won't see any bullishness until this breaks down. But at the moment, it's looking very strong. So nothing to look at too. And yeah, well, that's pretty well it, I think. Then you got Ethereum. Okay, it's very bearish looking. Look at that. It looks terrible. And that's rate cuts. So I just showed you interest rates before. And similar thing to ETH. Okay. So ETH had this wedge. As you can see, it's drawn out here. Pretty notably. The price was trapped inside it. Shot up. Went down as rate cuts arrived. And see this rate cut was right here. This red line. And this cut happened. And we did rally that day. And had one more candle. And then bam. Down we go. So 1 week, 2 weeks, we're down. You go to 2019. I should go on a logarithmic. Actually, it's the wrong one. Not on there. And we had this wedge. We broke above it. We came down into rate cuts. Had the green candle on that day. We had a week of nothingness. And then next week was bam, back down to this wedge. So just boof, shot right down. The similar thing is happening right now. Okay. So we had a green, it was pretty well nothing candle. And then bam, back into this wedge, just about. So it's playing out exactly like 2019, okay? And then as the cuts came, it just took Ethereum lower and lower and lower, right? Right, so from this wedge, it really pretty much, you can say here if you want, it fell 40%, okay? If you go from the top of the wedge where the rate cut arrived, it was 50%, 48%. Drop to the low, and if you don't include the pandemic, because we won't include that, because that was a bit of a black swan, but you can see there clearly from this candle down to here, 48%. All right, now let's have a look. Let's go to the wedge, and we'll measure it from the rate cut candle. And where's 40%, 48%? This is 42%, it's 1500. And if you look at 48%, looking at around, well, it's around here. It's in the middle of nowhere's land, but who knows? That's going to really play out. It could go lower, like 1200, or my target is 1000. That's really worst case scenario. The best case scenario is a 42% move down to $1,500, and that's it for Ethereum before it goes higher. That's the bottom. But I do see it going lower than that. Fortunately, the restrictive policy keeps coming and cuts come, and it just brings the price down, as it did here, okay? The cuts came, prices couldn't hold on. Just fell. And that was before the recession. That was not even recession yet. That was just before it, okay? So, yeah, it was bearish even though we had a soft landing here and then a hard landing here. The pandemic. Soft landing, it would have been the bottom for ETH, and ETH would have went into a bull run there. As you can see, it did. But this pandemic interrupted it slightly, and it obviously continued up not long after that big sharp drop. But yeah, something to note that we did not make it right down to the bottom of this bottom price action in 2018 December. We came down in the pandemic. So we eventually did come back and revisit these lows. If you go back to 2016 or so, December of that year, we came back to the lows made in April of that year. So we came back down to these lows, which is quite notable. Okay, it's wedge pattern, and we came back down the lows. All right, wedge pattern, came back down to the lows. Now we've got this wedge pattern playing out, and the lows are down here at the bottom right there, $1,000. But yeah, mid level is 1,500, and 2,000 is the bottom of this wedge. But yeah, we're sort of in this wedge now, and have to wait to see what happens to ETH. So that is that, and where I do see things going into 2025. And this will be optimal buying opportunity, and it'll be life-changing. All right, because 2025 is going to be a bullish year. I did make a video a few days ago about the real estate cycle, okay? And yeah, if you go and watch that video, you'll know why, okay? So yeah, check that one out. All right, guys, I hope you enjoyed the video. Just going over the crypto market and the labour market as well. So some of the data that came out, and it was sort of mixed. And we've got the non-farms and the unemployment rate coming out tomorrow night. So that's going to be very, very crucial data to look out for. See what the markets are going to react, and seeing the labour market holds up. If it's weaker or stronger, it'll determine the direction of the markets, because that's really what the Fed is eyeing on. See whether they can respond or be on top of it, or they're behind, like they were in 2021, 2022. They said inflation was transitory, and they were behind, and the markets declined. Okay, it was bad. But will they be behind this time? And induce a recession in this year, going next year, or put off a recession and achieve a soft landing, and somehow bring the job market back into alignment? And inflation obviously is going in the right direction, but the labour market could, just like ease a bit. Yeah, it's really hard to take. It's just all about that number coming out tomorrow night. So that's very crucial. And looked at the crypto grade in fear, seeing that we are back in fear territory, 37. And given the recent sell-off I've just seen, and yeah, the search trends are down pretty low, like from a year ago, October. So back to those levels again. It's pretty concerning. The retail has not arrived at all, and it's looking quite grim there on the search trends for Bitcoin. And look at some charts. Bitcoin, the dominance, the Ethereum chart as well, and the USDT and dollar. So all those charts to really see. Hold off for now. It's not time to buy, but I want to see these indicators flashing, and certain things occur. Have a strategy in place like I do, and I've told you in the video what to look out for, and it's the risk levels, and we're not at that risk level yet, or QE hasn't begun, and that's what you need to look out for. So okay, that is the video. And also just check out the property cycle video I did too a few days ago. That will really get you understanding of it repeats over and over and over again. And we're coming into the late stages of that, so we're quite towards the end, and the mania phase is upon us for next year, going in 2026, and a blow off top will be pretty massive, and a big decline will be pretty devastating. So you don't want to miss that move, and I don't want to miss it either. So I want to get prepared and get in a good spot now when the time comes to position myself for the big rise. All right, so if you enjoyed this video, please smash the like, comment your thoughts below. Please subscribe to stay updated. Check out the links below, and I'll catch you in the next one. Cheers.